Hey everyone. We're watching The Compound. Great show by Josh Brown. If you don't subscribe on YouTube, definitely subscribe to their channel. But they have Rebecca Patterson on. I believe she was a former chief investment officer or strategist at Bridgewater. And I love this clip. They talk about gold, investing in gold, physical versus one of the ETFs. We are a big, practitioner or proponent of investing in GLD as one of the ETFs. She mentions it here in the segment, but she also made a very interesting comment around you being able to take possession of the physical gold if something happens, which made us want to do some research to see if that was actually true or not. So I thought the comment was interesting and kind of worth exploring, but let me play the clip before we jump into the analysis and then go from there.
Here.
Let's do gold.
Okay.
I'm going to read you a quote. You tell me who said this. What motivates gold purchasers in their belief that the ranks of the fearful will grow? What motivates most gold purchasers is their belief that the ranks of the fearful will grow. Beyond that, the rising price has on its own generated additional buying enthusiasm, attracting purchasers who see the rise as validating an investment thesis. As bandwagon investors join any party, they create their own truth for a while.
It's a nice quote. Did you say that?
No.
Who said it?
Warren Buffett.
Oh, there you go.
So they asked him, why does gold...
Nice compliment.
Yeah, they asked him, like, why... I think this was during the last gold bull market, which peaked in 2011. Not a coincidence. It peaked alongside the uncertainty of the European debt crisis, the debt ceiling debate here. That was like gold's last big moment, and now we're having another one.
Yeah, we had a lot of fiscal stimulus in 09, 10, and there was a certain cohort of people who thought increase in money supply would also create gold, have gold going up. I ran the gold trading desk at JP Morgan's private bank during 08, 09.
So what do you know?
So I learned a lot about gold. I also had a forecast gold for JP Morgan when I first started in the 90s. So I have had an education about gold. Here's what I'd say about gold. Gold tends to do best at tails. So either a crisis/recession and you have a safe haven flow and yields are coming down. So gold has no yield, right? So when yields are coming down, your opportunity cost of owning gold goes down. That's one area where it almost always does well. The other area where it does well is when you have an overheating economy, not just rising inflation, but inflation rising faster than expected. So almost getting unanchored. We haven't seen that recently. In the middle, it doesn't mean gold can't do well, but then it becomes more about demand and supply. And demand is primarily jewelry from China and India. So then you look at those economies. Right now, we're in...
This is not jewelry demand.
No.
Yeah.
This is central bank reserve diversification, which has been going on for 3 years now. They have been buying major tonnage of gold, and the World Gold Council does a great job tracking this, so shout out to them. They have been buying gold for the last several years, especially China, but not only China. And then you have retail investors. I bought gold in January. I've been talking up gold for 2 years, and I finally said, what am I doing?
I want to ask...
I've been right. Why don't I
ask you
so
what you think so way before this trade stuff, the trigger, if you just look at a price chart, what really seemed to get gold in motion was when Putin invaded Ukraine, and the response, in addition to sending a ton of missiles over there, was to weaponize the US dollar and the SWIFT banking system. All of a sudden, that sent a signal to other countries. All this money that we have is ones and zeros on computer screens. That's not money.
Right.
Money is gold and oil and physical things.
Yes.
And that coincides perfectly with the start of this gold rally. You agree with that?
I totally agree with that. You saw Russia start to buy gold in 2014. It's been buying gold the whole way. But you're right. When 2022 happened and we froze Russian assets, it was a wake-up call for other central banks.
Yes. Okay. So you think this rally takes us to 5,000 an ounce?
Oh, yeah. I
sort of do.
I think it could, absolutely. At the beginning of the year, Tom Keene at Bloomberg said, do you think we hit 3,000 this year? I'm like, how about next week?
So just a note, gold has been trading around that 3,000 an ounce. So imagine if it goes up another 2,000 to 5,000. That's a really good return. That's what, like another 66% or so, kind of on the price of gold.
Whipped through
Right.
3,000 like it wasn't
No,
even
we're
there.
going higher. Again, it takes me back to the foreign investor. If you have people selling America, they're selling bonds and stocks. And when they do that, they sell the dollar, right? Because if I'm a foreign investor, I have to buy dollars to buy the US assets. I'm reversing that trade. I'm selling my stocks and bonds, selling my dollar, going back into my euros or yen or whatever. So the dollar's weakening. So people are going to be worried about a dollar devaluation, and gold is another hedge against that. It could help Bitcoin too, but I think gold is a safer play.
If this nonsense settles down
Mm.
and we get some more clarity and we get a rip in the dollar, what would that do to gold?
If we had clarity, trade war ends tomorrow, gold's going to fall hard because the central bank reserve diversification won't go away. They're seeing, okay, we can't trust the U.S. as a reliable partner. We're going to hedge. But the retail money that's gone into
Yes.
gold would pull back
The
out.
fear premium will
Right.
come out of it. And for all we know, that could be $500 an ounce.
Yeah,
We don't know
easily.
how big that fear premium is. You know what's funny about the gold rally? So you've been bullish for a couple of years. There was a story a year ago, maybe it's 2 years ago, about how Costco
Yes.
can't keep gold
The
bars.
little baby bars.
They're selling these tiny
Yeah.
little like bars in the
Mhm.
stores,
Mhm.
and every time they get a shipment, it gets wiped out that day. The public
So Josh is spot on here. I've actually even talked to some of the people at the local Costco where we live, and it's exactly that. You know, you go in and you say, "Hey, when are you guys getting the next shipment of gold?" And you talk to the workers. I even talked to one of the managers at Costco, and they're like, "We have no idea when it comes in. It's like either on the truck or it's not on the truck." They bring it out to, if you kind of know where their jewelry case is, at least the one near me and my Costco, it's kind of located around the area where they have the flat screen TVs in the front of the store, the computers and kind of the stuff around there. But they roll it out, they put it in the jewelry case, and literally within the hour, it's pretty much gone. Like there's just investors in these local communities. They see it, they get on the cell phone, they call their friends. They come in and they just wipe it out clean. So obviously, people have a couple of $1,000s worth of money just sitting around, ready to go to Costco whenever they get the next shipment in. So Josh is not exaggerating when he says that.
public's not so stupid, it turns out, sometimes.
So note to self, the little bars are fun as a holiday gift or something, but honestly, a gold ETF like GLD, which is physically backed. So if something happens to the organization, you aren't a creditor, you actually get physical gold. You have a lot more liquidity and you don't pay a premium. If you actually want gold bars in your home because you think the world's going to end, you'd be better off buying land and a fueled jet
Guns.
and guns. Yeah.
Yeah. I
So
agree.
buying physical gold, you do that for peace of mind, but it is a suboptimal investment.
Yeah, we
So that's all I'm going to play. But yeah, that part there around, you know, if something happens, you can, it's backed by physical gold and you could go in and get your gold. When you read the prospectus and these FAQs on these, these ETFs, I was always under the impression, yes, it is backed by physical gold, but you can't just show up with your, your Red Ryder cart and say, "Hey, fill up my cart with gold bullion from my retirement account." I'm going to switch over so you can see some of the things that I've been reading in response to that. So obviously a very knowledgeable woman, but that one piece she said about the actual gold backing and can you take the physical possession, I don't know. It sounds a little off from my standpoint. But let me show you kind of what I found. So this is Spider Gold Shares. This is the one that's most popular, spdrgoldshares.com. GLD is the one that I'm very familiar with, and it's often recommended by a lot of other people if you don't want to physically fight with the people at Costco or go try to rob a bank or something like that. I wasn't aware that they actually have this thing called Gold Mini Shares, GLDM, and it looks like it's at a lot lower price point. So something to look into if you're thinking about, actually using one of these ETFs to take advantage of this uptick in gold without having to physically take possession of the gold. But let's look at what it actually says on their website. Okay, so this is from their FAQ on, again, spidergoldshares.com. Can investor take physical possession of the gold backing their shares of Spider Gold Trust? The trustee does not deal directly with the public. The trustee handles creation and redemption of the orders of the trust shares with authorized participants who deal in blocks of 100,000 Spider Gold shares. An individual investor wishing to exchange the trust shares for physical gold would have to come to the appropriate arrangements with his or her broker and an authorized participant. So basically, they're saying, yeah, like we're really not set up for you to come down somewhere and collect your gold. So that's one thing to kind of be, just to kind of make note of what she was referring to, where I think there's a little bit of discrepancy. Interestingly enough, the custodians, so those that are actually holding the physical gold, once again, our favorite friend here, JP Morgan Chase Bank, and then HSBC Bank. And you'll notice here, HSBC Bank PLC holds gold on behalf of the trust at its vault premises in London. JP Morgan Chase Bank holds gold on behalf of the trust at its vault premises in London, New York, and Zurich. So that's kind of where the physical gold piece comes into play. But again, you pretty much have certificates or a piece of paper that says you have some rights to this physical gold. The other interesting thing here is when you come down to the part that she was kind of referring to, or at least alluding to, and it's towards the bottom here. What effect would the insolvency of the custodians have on the trust's allocated and unallocated accounts? And then it says here, let's see, the trusts will have no proprietary rights to any specific bars of gold held by the custodians and will each be an unsecured creditor of the custodians with respect to the amount of gold held in such unallocated accounts. So basically it's saying like, yeah, you have some right, but you're going to have to go through a lot of legal proceedings to prove that you have the right and hopefully get made whole based on if something would happen to HSBC or JP Morgan Chase and they say, oh, sorry, we lost your gold. We know this ETF was backed by physical gold, but for some reason it's not in our vault anymore. We lost it. So that's why I think, even when you see people making a run at the local Costco for the physical bars are in your house or hopefully in a safe, or maybe you have it at a bank. There's pros and cons to keeping gold bars in a bank vault, but people do that. A lot of people just keep it in their house in a safe in their home. But when you do trade with these ETFs, there is still a little bit of risk that, something, would happen to HSBC or JP Morgan. And then you're saying, well, I have all these shares in GLD. Where's my physical bar? So something to keep in mind. Again, that's a little bit different from what she was saying. In my research, there was also something else that came up where it was this other ETF where it is backed by physical gold and you can actually take possession. It's PHYS is the ETF and it's PHYS. And let me hop over to that website so you can see how I learned about that. So this was an interesting article on NASDAQ.com, Investing in Gold, Forget GLD, by PHYS instead. I'm assuming that stands for physical, so kind of neat, cute name there. But article May 21st, 2024, so not that old. Michael Burry rose to fame, obviously a Big Short. It goes on to say, that recently that the ETF that he took some interest in was Spot Physical Gold Trust. And then it talks about it's easy to see why Burry bought gold. Why buy gold? Kind of we know all the good things about that. But here is kind of the interesting thing. There are several exchange-traded funds, ETFs, out there that are backed by physical gold. The largest and best known of these is Spider Gold Shares, GLD, which we just talked about. However, it is interesting to note that Burry instead purchased shares of PHYS. There are several very good reasons why he did, and why you should also consider this ETF, because it's superior to GLD. Let me highlight some of those reasons for you. If you, like many gold investors, want to hold physical gold and not paper gold, PHYS is for you. And so they go on and they talk about, this piece here. Also, shareholders of the Sprott Physical Gold Trust have the right to redeem their shares for gold bullion. GLD owners do not. So they're basically saying if you own GLD, you just can't say, hey, I want to turn my shares directly into gold bullion. And then there's one more. We're going to go to the Sprott site here just so you can see that. And they say the exact same thing that is being said in this article. So here's Sprott's their fact sheet, Sprott Physical Gold Trust. The goal of Sprott Physical Gold Trust is to provide a secure, convenient, and exchange-traded investment alternative for investors who want to hold physical gold without the inconvenience that is typical of direct investment in physical gold bullion. Reasons to own: fully allocated. Redeemable for metals. This is the key right here. Unit holders have the ability to redeem their units for physical gold bullion on a monthly basis, subject to certain minimum requirements. I don't know what those minimum requirements are. I don't know if it's easy. They have a footnote here, but kind of the long story short here is that, they are making a strong case of why you should consider this fund or this ETF as opposed to GLD. Again, I'm very familiar with GLD. I think it's still a good investment, but this is one that you may want to also look at in terms of if you want that physical aspect to it. And I believe the share price is a lot cheaper than GLD. So take a look at it. Again, as always, you want to be diversified. I believe, not only in Bitcoin, the digital gold, but also in the physical form, whether that's truly physical or kind of this virtual or ETF. I think both will work. So good luck and happy trading.